Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV. This week I'm reporting from Melbourne and caught up with Chris Conway at Australian Stock Report to find out exactly how traders are trading those volatile markets and some of his diamond calls for the week. Chris Conway, many thanks for taking the time to chat with Dukascopy TV today. Much appreciate it.
Thanks, Natalie. Thanks for having me.
No problem at all. Okay, so let's get on to the investment scene. And investors are really gripped by fears of global concerns at the moment, namely China, the US, the Eurozone. The recent RBA notes did suggest, however, that China really is the game changer at present.
Yeah, look, I wouldn't disagree with the premise of the question. China certainly is the epicenter for what's going on in global markets at the moment. Throw into the mix there the US and the potential rate lift-off as well, and those two things are very intertwined. Certainly the slowdown in China could hurt Australia, of course, because we export so many commodities to China. But throw into the mix, a slowing economy in China and the potential to raise rates in the US, and all of a sudden the global economic picture looks really, really troubled, which, whether you're Australia, whether you're the Eurozone, whether you're any region in the world, it's really going to struggle to see where growth is going to come from. So, yes, certainly China is a significant, it's our number one trading partner here in Australia. So what happens there, of course, will definitely impact what goes on locally. But I think it's probably on par with, like I said, what's happening in the US, and those two things being, super intertwined. And if they both go bad, well, the Australian economy, the global economy, and global financial markets are probably all heading south, unfortunately.
Are you noting investors adopting sort of a short strategy or longer-term holding to really get around that market volatility?
Yes, most definitely. In terms of our subscription-based products we have here at Australian Stock Report, we've noticed a significant pickup in trading activity and people wanting access to trading recommendations both on the long side and the short side. That being said, I don't think long-term investors will be dumping their portfolios en masse and shifting to a trading strategy. I think what we're really seeing there is, look, traders will always be traders and they'll always look to take advantage of volatility like what's occurring now. But I think longer-term investors are most definitely, like I said, looking to add strategies or to add facets to their investing and their trading so that they can take advantage of what's going on now in terms of the volatility, or perhaps also looking to hedge their portfolios against, being beaten up, which is what's occurred over the last couple of months with the Australian market falling close to, nearly 20% now. So, yeah, there's definitely been a pickup in trading activity, but that's synonymous with volatile times like we're experiencing now.
Let's talk about being beaten up. The ASX, it's just experienced its worst month since the global financial crisis. We're very nearly into the fourth quarter of 2015. How is this shaping your outlook really kind of moving forwards?
Yeah, look, as I was saying earlier, I think it is a troubled outlook for the global economy, for Australia, for China at the moment. And I think those two elements that I was talking about earlier in terms of the slowdown in China and indeed what the US does regarding interest rates, that's really going to dictate where we end up towards the end of this year and indeed where we head into 2016. So if they don't get those two things right, or if China continues to slow faster than what everyone's hoping, which I think it will, and if the US lifts interest rates too soon, which I'm really, really hoping that they don't, but if they do, then I can't see the ASX 200 making any appreciable gains into the end of the year. We'll probably sit around 5,000. And if the US Fed decides to raise interest rates, then I think we could head towards maybe 4,800 or 4,700. Economic theory tells us that interest rates shouldn't be lifted unless you have an overheating economy. And I don't think anyone could sit here and say, with a straight face that the US economy is overheating at the moment. So I'm really concerned about the Fed raising rates. I genuinely hope that they don't do it. I hope that they heed Wall Street's advice. I mean, the big 1,000-point sell-off that we saw on Wall Street the other day, I think was Wall Street saying to the Fed, please don't raise interest rates. So, yeah, I don't see us making any appreciable gains towards the end of the year. 5,000 is probably the cap.
We're seeing negatives across most sectors, domestically speaking. And within that, though, are there a few sort of diamonds in the rough? What are your buy calls at present?
Yeah, so, well, in terms of trading, we have very few buy calls. In terms of investing, there are some stocks, and look, it really is a stock picker's market. There's a couple of names in the retail space that we particularly like. One is Retail Food Group. It's been sold off to the tune of about 40%. since March was the high of $8. But they've been on the acquisition trail. They've bought up Gloria Jeans. They've bought up a number of pizza takeaway businesses as well. They're folding that into their broader offering. They're building a really good solid base. They have a strong coffee grinding network as well that they sell to other retailers. So we think they're pretty well positioned to take advantage of the upside when it comes. The other name that we particularly like in the retail space is Premier Investments. This is Solomon Lew's company. They have a number of great brands. One of their key planks is the Smiggle brand, which is a children's stationery brand, which they've been rolling out in the UK. They've got 8 stores currently. They want to expand to 200. It will drastically increase their revenues. We think they're going to do that particularly well. So that's another name. It reports on September 17th, so a couple of weeks from now. They surprised to the upside last reporting season. We think they will do it again. And today we had some retail sales numbers that showed that the clothing segment and indeed the takeaway food segment were strong, whilst the rest of the retail sales were actually quite weak. So there's a couple of names there that we like. The banks perhaps as well are at fair value, and probably the commodity players as well. If you're a really long-term investor, they're nearing the bottom of the cycle. So there's a few names there that we don't mind having a look at the moment.
Certainly a few for the bargain hunters then. Chris, many thanks for the update.
Thanks so much for your time. I appreciate it.
That is all we've got time for right now, but the Dukascopy TV team will be bringing you plenty more exclusive interviews and updates. For now, though, it is goodbye.